hold these truths to be self-evident, that all men are created equal, that they are endowed by their Creator.
All right, welcome back to the next episode of the BC Law Just Law podcast. I'm Tom Blakely. I'm here with Jim Fiore, and Professor Brian Quinn is joining us again because we've got another deal that's been, I don't know if anyone's heard of it. Elon Musk buying Twitter. We want to talk about what's going on with that because I'd imagine this is like your M&A class. This could just be the final. Like this could be the issue spotter.
Well, the final is going to be next week, so I don't want to give away any secret information. But we've been talking about it quite a bit for the last 2 weeks.
I can imagine we're covering a lot of bases here. All right, so we just want to talk about this deal because this has been just like the only thing in the news, it feels like. And it just kind of touches on not only all kinds of different areas in M&A and in corporate law, but it just feels like this is what hasn't happened in this deal. So we just want to go through it. So for those who aren't aware, so on April 4th, Elon Musk announced he'd acquired a 9.1% stake in Twitter on March 14th, which made him the company's largest shareholder. On April 5th, Twitter invited him to join the company's board. On April 14th, he made an unsolicited and non-binding offer to purchase the company for $43 billion. April 15th, Twitter's board announced a poison pill strategy. Then you keep fast forwarding, I feel like something happened every day. And then finally on April 20th, Musk disclosed he had a $46.5 billion of funding to do the deal. And lo and behold, very recently here, as you predicted earlier this week, it was announced that this thing looks like it's going to go through. But just rewinding with all this stuff, just tell us about this. It just feels like every day I'd open the Wall Street Journal, this is the only thing in the news. It's been, the politics, just everything has sort of come into this deal. But if you can just explain for us, kind of what's happened here, how this happened, how it feels like it's kind of come out of nowhere, the world's richest man buying Twitter. What's this about? What's been going on here besides everything?
Yeah, what's this about? I don't know if it's really about anything. I've been having conversations with people who are looking for some grander meaning, and I don't think there's a grander meaning here, right? What does it harken for the future of activist investing and all that? No, I don't think so. This is really, I think, the world's richest man seeing an opportunity to buy his most favorite plaything and just going for it. And good luck to him. This is not going to be easy because once the dog catches the car, it's in for a surprise.
And how does that compare to the deal we talked about on the episode you joined us previously? Like two giant public companies merging, and this is just like a guy, private citizen, just with a lot of money.
Yeah. So we previously talked about the Activision Microsoft deal, and there was clearly a corporate strategy on Microsoft's part. Hey, the metaverse is a thing. And we're going to use Activision and gaming as a way to get into the mobile metaverse. Right. And that's going to be part of our future, right? And that's a very traditional corporate strategy and using acquisitions to grow and develop. And here, literally, it's got nothing to do with anything else the guy is up to. And he is leveraging Tesla in order to do this deal. Yep. And he's acquiring a business that makes about $1 billion a year in profit. And he's going to have to pay for it.
Yeah. Is there the same amount of regulatory scrutiny, though, since it's like a private citizen, not like public shareholders?
Well, no. So there is a lot of regulatory scrutiny on the Activision Microsoft deal, and that's going to face its own challenges in that regard. But in this space, the fact that he's an individual doing the acquisition doesn't really matter. What matters here is that he is not like a big tech platform. It's not a consolidation of the industry. It doesn't raise all these antitrust issues that are really going to be a big challenge for Microsoft. So the different like the apples and oranges in that regard.
So as this has gone ahead over the last few weeks, there's been a lot of resistance in the media, politically, reportedly, factions within Twitter almost who sort of opposed the Musk and his agenda, and people who didn't want to see this deal go ahead. You'd read these articles, and oftentimes it's not clear exactly why. Just this extent, he's going to come in and turn things upside down. People saying, "Oh, Trump's going to come back." Just all these things that have sort of been out there. And I'm just
can I say that this got weirdly political?
Yeah,
very, very
exactly.
Quickly. And I to my class, I told them I just don't understand. Yeah. But it's a very people have just jumped on sides for
and it's not always clear exactly what it is, other than we just don't like this guy.
Yeah.
So I'm just kind of curious, when you talk about the duties of the board to the shareholders of a company, how do you balance sort of these you might call them political concerns, the business strategy concerns, with the fiduciary duty to, when a significant amount of money is on the table, to do right by your shareholders. How does that work behind the scenes? How's that balanced? And what's the board supposed to do here? And do they do it?
Yeah, so it's a good question. So, I mean, the board has an obligation to act in the best interests of the corporation and its stockholders over the long run, however they define the long run. Right, so that means things like if Musk comes in and says, "Hey, I know you've got all these moderation policies. I'm just going to get rid of them. So now you should sell me the company." The board can say, "Well, this corporation over the long run is going to be best served by having moderation policies, and we think that's important and valuable. So no, we don't want to sell to you." And they're not required to. They're not required to sell. This was a big misunderstanding by a lot of people with blue check marks very early in this process, that once Musk showed up with an offer, that the board was required to sell to them. They were not. So they adopted a poison pill. That's a defense against an unsolicited offer. That's an effective defense. So if they wanted to, they could have held him off for as long as they wanted to. Right? They could have held him off or used the pill to negotiate a higher price.
Can you talk a little bit about, for the uninitiated, what the pill is, and is that what was used here? Because you're right, all the blue check marks was just kind of opining about how corporate law works, who might not know what they're talking about. Can you just talk a little bit about what the poison pill is and how that worked here? Yeah,
so a poison pill is a corporate defense developed during the 1980s at the height of the leveraged buyout boom of the 1980s. And what it does, it's let me see the easiest way to put this. The board of directors issues a new class of stock to all existing stockholders. And this new class of stock gives existing these new we call them rights or options, right? Issues these options to its existing stockholders, and it gives them the right to purchase additional shares of the company at a discount in the event something happens. The something here happening being if some unwanted person comes along and without the assent of the board buys more than 15% of the company, right? So in the event Musk were to acquire more than 15% of the company, everybody else who's not named Musk would be able to buy additional shares of the company at a discount, and they would. And that would put Musk going from 15% down to 7% of the company.
So it just continues to dilute his position.
Like if you're a classics major, like Sisyphus rolling a rock up a hill, you get to the 15%, the rock rolls back down the hill, and you do it again. So really what it does is it destroys the acquirer's economic position and just makes it impossible for them to do an acquisition without the board saying yes. So the key here is to put the board in a position to negotiate with the unwanted acquirer to get a higher price or to get no price at all, right? So if they just believe that this guy who's buying the company, wants to buy the company from us, just has the wrong idea of what's in the best interest of the corporation, the shareholders, and all the other various stakeholders, they don't have to sell it to him. In this case, they did.
Yeah. So when Musk comes along with over $40 billion in financing, what does that mean for shareholders of Twitter? And I guess how could that influence, and I guess it ultimately did, the calculus behind the scenes of whether or not this is a deal that is in their interest?
Yeah. So again, the board's not required when he says $54 a share. The board's not required to immediately say yes. But what they are required to do is consider that offer. Again, they're free to say yes or say no. And what happened, I think, was they got the $54 share offer. They went back to their bankers and they said, can we do better than this for our shareholders over the long run? Are we doing anything now that we expect will pay off over the long run, whatever that is, such that we'd be better off telling our stockholders to hang in with us? And I suspect the answer there was pretty quickly, no. Right. There's nothing you guys are doing that can pay off in that way for your stockholders in the short or the long term.
But are you surprised there wasn't more of a, I don't know if the right term would be like a bidding war, but to see if other companies would buy it?
I'm frankly shocked, actually.
Yeah, that
I'm shocked,
maybe like Apple or someone else wouldn't come in and try to buy it.
Well, no. I wasn't expecting Apple or anyone else to come in. But what I'm shocked about is that on Sunday, Elon Musk sent a letter over to the board of directors and said, $54 is my best and final offer, and I'm attaching a draft copy of a merger agreement that you should feel free to sign and send back. That morning, the board met. The next morning, they signed the merger agreement. And when you look at the merger agreement, it looks like they just signed it. I mean, I wonder what they negotiated about, because they certainly didn't negotiate for an extra 10 cents for the stockholders. There's like not a nickel more. So yeah.
So if what Musk was bringing to the table is just so, you might use the word generous, such that this was able to go through, it sounds like relatively smoothly once they saw, this is might be the best we're going to be able to do. I'm just curious, how does he get return on this investment? I know you described it as the world's richest man buying his favorite toy, but what's the strategy here with this? I mean, he's leveraged his other assets. Like, from a business standpoint, where does it go from here?
Yeah, so it's an excellent question, right? So he's got $12 billion in bank debt that has to get paid. You guys are law students. You know what paying off debt's like.
Right.
You got to send in that check every month. So he's got to pay that bank debt, come what may. And it's $12 billion. Let's say it's at 5%. That's $500 million a year-ish in interest payments. I mean, Twitter made $1 billion last year. So half of their profit going to pay off that debt. Yeah. Then he's got another $12.5 billion in margin loans. So this is debt that he's getting from an investment bank, where there's collateral. The collateral are his shares of Tesla. That also has to get paid every year. Probably the same amount of money, probably the same basic terms. It's another $500 billion. So there's all the other profit that Twitter makes. And then he's got equity contribution, about $21 billion of equity contribution. He's the world's richest man, but he doesn't have a lot of income. Right? I mean, his income is from he margins his stock for cash, and that's how he lives his life. So he doesn't pay much in taxes. So we know he doesn't have like a lot of money sitting in bank accounts. So he has to do something with his Tesla stock to get the other $21 billion in cash ready to go. So he's either going to sell it, which he sold $4 billion worth of stock yesterday, or he's going to have to margin it.
So he's doing these things to get the liquidity to make this thing work.
But then you have to pay back that money,
either
to himself or to the bankers for his Tesla stock, where he has to cover that debt, that Tesla stock margin debt with Tesla stock that he's going to have to sell, or he's going to have to drag the cash out of Twitter itself. It's not easy. No. I mean, he's going to, when he gets this company, and he will get this company, it's not clear that it's going to look anything like the company that existed last year.
Yeah, I was going to ask if you thought there was any way this deal still falls through somehow. Was it whether it's a financing issue?
No.
Think it's...
So the way the financing is set up, there is no financing condition. Yeah. The deal will get done. He has an obligation to complete the transaction. If he does not come up with financing, at the company's discretion, they can seek what's called specific performance. The court will require him to buy the company, or he pays $1 billion as a reverse termination fee. But that's at the company's discretion. And the way the financing is set up, for example, on the margin loans, he's got $12 billion in margin loans coming from Morgan Stanley, for which he has to put up $5 worth of Tesla stock for every $1 that Morgan Stanley is going to lend him. Yeah. Now, a lot of things can happen to Tesla stock. That's got to be a huge drop in price for that margin loan not to be still worth $12 billion. So he might leverage himself out of existence, but that money is going to get paid to the Twitter stockholders. And, I'm not going to cry for him because whatever's going on, he's still going to have a bed to sleep on somewhere.
I'm sure he'll be fine. So like you said, there's $46.5 billion from Morgan Stanley, Bank of America, Barclays, just a whole
list of them.
A whole cadre of institutions here coming together to make this thing work. I'm just curious, are there, again, Tesla's a large company that's people are certainly familiar with, and like a lot of other companies, there's a lot of these obligations on that end too. I'm just curious, could there be voices within some of this guy's other properties just saying, what are we doing? You're kind of leading us astray here. I don't know if you're doing right, in terms of his obligations to Tesla, to his other properties, and trying to make this thing work, or is he just calling all the shots? It seems like.
Yeah, I mean, before he sold his $4 billion worth of Tesla stock yesterday, he was a 22% stockholder of Tesla, right? If I was on the board of directors of Tesla, I'd have some real questions. Yeah. What are you doing? What are you doing? When he sells his shares or he margins his shares of Tesla, that has impacts on Tesla shareholders. I mean, the price is down to from when he signed up the deal, $1,000, $1,005 a share, down to like $889 today, right? That could turn into a death spiral, depending on like what happens with respect to his being able to finance this company, because the company's going to get the acquisition is going to get financed, right? And it's just a matter of how much blood is going to get drawn from the Tesla stone to do that. Yeah. And so, if I were a stockholder or on the board of Tesla, I'd be extremely worried about this.
Looking at the long game here from us, I mean, would you say this is sort of a new generation of like sort of activists? They call them investors, oligarchs, you might say, because this guy likes to. You think back to. And I think you actually your first appearance with us was last winter with GameStop and everything that happened there, and he certainly was vocal there, and it seems like a guy who doesn't shy away from sort of playing with some of the plumbing of the stock market and sort of getting involved in these deals. Is this sort of a preview of coming attractions, or is this just sort of a moment in time in terms of very rich people, using social media, megaphones and trying to influence things, or is this sort of a moment in time?
There's only one richest man in the world, so I wouldn't look to him as the example for all the other richest men in the world to do, right? Because you only get one of them. So I don't see him as the new wave of activist investing. So this is its own thing. It's going to stand or fall on its own 2 feet, and there's a lot going on with respect to activist investing and ESG and environment and all that other stuff. But I don't see this as a model.
Okay. Another question is with respect to Twitter. Twitter is, Musk has called it, this is the new public square. Freedom of speech, all these other issues. In the last few years, particularly involving elections and things in the political realm, there's been questions about how should companies like Twitter, tech companies, how should they be controlled? How should they be regulated? Do you think that this sort of influences that trajectory at all? I know people, like you said, it got weirdly political. Elon Musk seems to be looked at as someone who's on the right. Like, it just seems like this is, depending on what your politics are, people have some feelings about what role, if any, the government should play in a situation like this. Do you think that going forward here, in terms of from a regulatory standpoint, this could change things at all, or it sort of comes against the moment here where there's been questions about Facebook, Twitter, how to regulate things like that. He's a company that he's taking private. He's said he's got some ideas about freedom of speech, about how things should work. What does this mean at all for sort of this intersection of regulators and government and corporations when it comes to the world's richest guy being able to own the world's biggest megaphone?
Yeah, I think all of those discussions about the megaphones, all the platforms, they're all still out there, and they all still have to be thought about, and people have to make really hard decisions about what does it mean to be to run a thing like a Facebook or an Instagram or a Snap or a Twitter, right? And what role government should play in terms of things like content moderation, right? I mean, his view seems to be fairly simple, I think. His view is the First Amendment, and if the First Amendment allows it, let's do it. So, I fully expect that the day he takes over, there'll be lots of porn on Twitter, right? That's in the First Amendment. There'll be lots of, videos about crushing kitties and things like that. That's all First Amendment protected. I mean, there's a lot of stuff out there that Twitter doesn't allow, and we're all like, okay, that's a good idea. Don't put that on there. And if he's going to let it all back on and turns the place into a cesspool, if I'm a former Twitter stockholder, I've got $54 in my pocket. What do I care?
Right. I mean, you get Twitter CEO Parag Agrawal will be making $30 million from the buyout. Co-founder and former CEO Jack Dorsey, $978 million. Money talks. It seems like certainly here. But managing the company, and I guess I kind of wanted to finish on this note. Going forward, what kind of leadership structure within Twitter can we expect? I mean, it seems like when you buy out the company, as Musk has, it sort of puts him in charge, at least in a lot of people's minds, of Twitter and the way it works. It seems like it's all going to be up to one man all of a sudden. In terms of corporate governance with Twitter, what can we expect to see going forward? Is it just Musk calling the shots? Is there going to be a new board? Like, what is the leadership of this company going to look like going forward?
Yeah, there'll be a board, but it'll be nominal.
Right.
Because that board will report to Musk, and if they go stray too far away from what Musk wants, they're going to be gone. So, so there'll be a board, but he's going to be responsible for whatever it is going forward. And you can imagine what's going to happen. Here's a business that throws off $1 billion in cash a year. That's going to have more than $1 billion worth of debt demands every year. Oh, big changes coming for the employees of Twitter. The company's going to look very, very, very different in the future.
And Musk has said the economics don't matter to me. It's
going to matter a lot when you have to pay that bill.
Okay.
Lastly, Musk has gotten into trouble before from actually his activities on Twitter with respect to laws regarding securities and doing some things he probably shouldn't be doing. Now that he owns the platform and owns the company, has all of this, at least theoretically, control over how that works and what people say. Could there be heightened scrutiny for this? Because I feel like if we saw with the GameStop last year, and the way if Trump, whoever goes on Twitter and says something about a company, we can get the stock price to move quite a bit. There's a lot of control that this guy suddenly has that he's gotten in some trouble for running afoul before, just as a user of Twitter, albeit a pretty powerful and outspoken one. Are there some legal concerns, policy concerns over owning a platform that's so influential to discourse, to the stock market, as we've seen its ability to move the needle with the stock market and the economy and so forth. Is there concern there for this newfound control over something that's so powerful?
Yeah, I mean, they're the same issues again that all the other platforms have to deal with. So I don't think we put him in a separate bucket necessarily.
Yeah.
But when he gets control of this thing, he's going to realize it's a business. I mean, he knows it's a business, but it's a business that has to get run in a way that at least generates enough cash to pay off the debt. Otherwise, it's the end of the show for the company. And not everybody has to stay there. Not everybody will stay there. If it turns into like a porn-infested crazy show, people will leave. And it's not the first time in a social network. I mean, how's your MySpace account doing?
Doing great.
More of a mechanical point. Musk has said he wants to keep as many shareholders on the board as possible. Is that just him trying to like placate people, or how would that work?
Yeah, so there are. My guess is the best targets for him for that particular statement are Jack Dorsey, who owns about $1 billion worth of shares, as well as Elliott Management and Silver Lake, who are private equity investors who are on the board now, and they got in around $50 a share. So I think he's throwing out an opportunity for them to stay, reduces the cost to him if they're able to roll over their shares into the new Twitter. But we'll see if they decide to jump on board or not.
Yeah. All right. Well, this has been BCL's Just Law podcast. I'm Tom Blake with Jim Fiore and Professor Brian Quinn discussing Elon Musk's purchase of Twitter. It's obviously something we're going to have to continue to watch going forward. So, Professor, thank you for joining us once again. Another wacky deal to talk about. And until next time, that'll do it. Thanks, everyone.